Beautiful.
Great. So we're so privileged to be here in front of you today. We have the best topic, in my opinion, which is really talking about innovation and in digital payments. So I'll let the panelists introduce themselves and we can get right to it.
Thank you. So, Jambo, and thank you, Tradepass, for giving us this opportunity to just share our ideas. So, my name is Russell Akuom. I work with an entity known as Letshego Group. Letshego is known as a fantastic lender, but they're deliberately panning out into other solutions, and one of that is payments. So I'm looking at the payments elements across the 11 African operation areas that they're operating in. So I'm happy to be here. I'm also a marathoner, a kickboxer, and a dancer. Thank you.
Yeah, good afternoon, everybody. My name is Steve Njenga, Group CIO Payments for Equity Group Holdings, which is both the bank and the foundation. I've been in the industry, about 20, 25 years. Payments in the last 5 or 6 years. Thank you.
Good afternoon, everyone. I'm Monicah Ndung'u. I'm the head of payments in Ecobank. I'm really passionate specifically about Swift payments and looking about innovation and digitalization in that area. I'm also a digital literacy advocate, a mom, and I enjoy speaking. Thank you.
Great. I think we've noted, Mogore and I, that we are the first ladies on this. Is that the case? I think so, today. So, very honored to be here. So to start us off, we want to talk about the problem statement, right? If you think about digital payments, it feels like an area where, especially if you're Kenyan, that an area where it's been already innovated in, right? Are there still unmet pain points? And that's the first question, which I'll direct to all the panelists. The payment space in emerging markets has evolved quite dramatically over the years, from sending money through post and buses to vast adoption of mobile money. Would you say there's still some customer unmet needs and pain points? So we can start with Monicah.
Yes, Jemima, looking at our landscape, financial landscape in Kenya, we still have such a huge unbanked population. So yes, there are customers we are not reaching, and there are customers who need our services, and maybe we are not able to deliver because first and foremost, maybe they're not banking, they're not having the traditional bank account, yes. And I know mobile money has really revolutionized in the country and created opportunities for these people to have a form of, banking maybe scenario or experience, but still, there's still people who don't believe in a bank account. So yes, I do believe, say, maybe in the rural areas, or you find that maybe in terms of economic status, there are people, if you look at maybe smartphones, many of our customers have feature phones, or our target customers, they're still using feature phones. A huge percentage are not yet on the full smartphone capability. And so those for me would be the unmet customers. In terms of pain point, I'd look at it like this. We've heard from our previous speaker that the young population, they're very techno savvy. They want a single point of contact for all the products and services they're accessing. So do we have that? Do we have an app or a banking app or a financial institution app that can give them everything they need? And also in that aspect, I've had experience with a colleague who was saying that they are European. So their banking app provides for them information not only about their account, but it can tell when they're using food apps too much to order food. And so it gives them some form of financial information that, you're spending too much money on food apps, or you're spending too much money here. That's a form of like free financial advice. So do we have points of contacts that can give information, that can maybe check my fitness? Can it count my steps? So that our innovation and solutions are not just about the account on its own, or, the money you're holding with us as a financial institution. The single point of contact where I can do everything by a single point of touch. So for me, those are some of the customer unmet needs and pain points that maybe our customers may be experiencing. Maybe if I could check one more is on that customer insight, we need to tap into the data analytics. Let's use the data we have for our customers. Personalize your solution to your customer. for me, Monicah, what my bank should offer me is not the same as it should offer you, because our financial habits would be different. Maybe our earning scale is different. Maybe I'm an entrepreneur, meaning I don't have maybe a certain amount of money coming in every month. Could we use consumer insights and data analytics to provide a solution for Monicah that is different from Jemima, from Steve, and from Russell? Yeah.
Makes complete sense. Steve, your view?
Yeah, sure. I think just to add on to that, I think even the fact that we have a lot of M-Pesa and M-Pesa-like apps, you notice that a lot of the volume of traffic, say at agents, there's a lot of cash in, cash out. That already indicates there's a problem somewhere. Where are people cashing? Where are people taking money out? Because they have to go spend it. So it means that there's a pain point somewhere. I don't know where it is, but there's a pain point somewhere in the payment journey they're trying to complete. So they have to go get the cash, right? So that's an area, and I think it's tied to some of what you said. We don't have a one-stop shop. I have to go from here to there to spend my money. I think those are areas that need consideration. I've also, even talking to customers who have smartphones, there's an issue of how secure is my money with you? There's a lot of social engineering, as you know, from the guys in committee. So they're really not, they just want to use the bank account as a place just to keep their money, but then moving money around from that digitally is a little, they hesitate. So I think the FSIs are not doing a good job of driving customer awareness that, we will protect you as best as we can. And as long as you're not compromised with your own intent, you should be okay. So those are two areas, I think, where there are pain points that still need to be addressed so that we can drive that adoption. And I think the third one is cost relative to the value I'm deriving from that thing that I'm buying. Until a few years ago, M-Pesa used to, I think now there's a minimum fee after 1,000 bob or something. But prior to that, we had gone on a CSR visit to Kibera, for example, and the natural assumption was that everybody there uses M-Pesa. It turns out only less than 10% use M-Pesa because it's too expensive. Yeah. So there's a cost issue there as well, which I think needs to be addressed.
Yeah, just on cost, the habits we've seen with a lot of markets, like emerging markets, is you find someone has a card, so they're banked, they've been given a card. It's still being called an ATM card, because they don't know that you can use it anywhere else other than an ATM. And what happens is that they go to the nearest ATM to a supermarket, they withdraw money, right? Because they assume they're being charged about 30 shillings, maybe to 45, withdraw money and then walk into the supermarket to actually buy things, right? Not knowing that you can actually spend money at a POS and it's free. So yes, you're right that there's a lot of education that needs to happen by the banks to their customers to explain to them that you actually can use your card at a supermarket and there's no cost there. Yeah. All right. So Russell.
Yeah. So I tend to agree with Monica and Steve, right? And I think for me the more pertinent question is why. You see, we'll always have unmet needs, especially around payments. But why is that the situation, right? So it boils down to three elements. One, I'd call it, path dependency to Western environment. I'll explain that. Then there's reputation. And finally, there's what I call regulation. Okay? So when you look at path dependency to Western environments, let's look at technologies that we use within financial inclusion. Okay, let's pick one. One that has been infamous recently, blockchain, i.e. digital currency, i.e. Bitcoin. You look at Bitcoin, it presented 1 in a billion opportunities for your normal person on the street to become a millionaire, right? All you needed was a PC desktop and internet connectivity, mine, and initially they became millionaires. Then look at the others, Ethereum, okay? A private sale made in the US, bought mostly by wealthy individuals who profited off Bitcoin, and as their value, appreciated, they started wondering, what am I going to do with this money, right? So they generated more projects within the blockchain era. So these use cases that are coming with these technologies are more Western oriented. Okay? And this applies to any other technology you can think about the financial inclusion. Yeah. So there's that path dependency to Western environment, not really necessarily focusing on the pain points that we have in Africa. And this also boils down to the startups, the financial startups that we have. They suffer from, I would say, what I call the Silicon Valley syndrome, right? So the founders rush to achieve faster growth and get better valuation and not really focusing on handling the problem on the ground, right? So we also judge startups from the amount of money they raise from VCs rather than from what they're actually doing on the ground. So it accelerates that. So you find that there'll be a lot of pain points that are not being addressed within this area. So the second thing is reputation. You see, the financial industry is very emotive because it involves your money. Okay? So customers like to engage in financial products that are provided by reputable companies. Now, a company with a good and huge reputation, has so much to lose by risking. So they can't risk their reputation. So what happened? They don't risk, they don't innovate. Now, the small, nimble companies that can actually innovate and do this risk, they launch their products, no one really takes them up. Okay? So now that calls into all this discussion about collaboration with the big reputable companies and the small ones. Ask yourself, how come it's only in the financial industry that this whole talk of collaboration is still ongoing? I never had, in the retail industry, Amazon being asked to collaborate with Walmart, or even in the entertainment industry, Netflix being asked to collaborate with Blockbuster. It's only here because reputation is key. And the bigger reputation you have, you're not really innovating. So, and if you start collaborating with the small ones, of course, everyone, collaborates to their own advantage, and it leaves a lot of unmet needs. And then the third one is the regulator. It's always boring when it is said in a panel, but it has to be said. Regulation needs to be looked into, right? In my spare time, I work with very brilliant developers developing products around Web 3.0, NFT space, and so on and so forth. So they have interesting use cases, right? But before they launch, they realize that to solve real Africa problems, you also need to handle real Africa regulation and real Africa KYC. Now, if you look at the platforms that you can actually do KYC for an African customer, right, so that they can start purchasing NFTs and etc., Africa hardly has any exposure. So where are they KYCing? In the UK, in Denmark, in Germany. So these products sort of shift back to the West, right? Now, until we look at how regulation can support that so that you meet the local needs of the African customers that you're targeting, there'll always be needs that are unmet through financial technology.
Yeah, it's interesting you say that because whenever I think about unmet needs of Kenyans, for example, I always think about that shop by the corner. It doesn't matter where you grew up, whether it was in the rural areas or in Nairobi, you always had that little shop, that mom and pop type of shop that wasn't very far away from your house. And whenever you don't have, salt or bread in the morning or milk, you're sent there to buy something, right? And if you were to go back home and look at that shop, has it changed? Is it the same owners? Is it the same person operating that shop? Likely not. Maybe their daughter, maybe their nephew, niece. But in terms of its setup, have they grown? Did they have aspiration to grow into a mini mart, for example, or even a supermarket? And what stopped them from growing from that little shop into something bigger, right? And it's not out of lack of aspiration, I believe. I believe it's just maybe the regulator, maybe the bigger brand's reputation, like you mentioned, that were unable to really solve that need of that owner of that shop. All right, so let's move on to what we've been able to achieve, right? We've talked about the pain points, we've talked about the unmet needs. So this question, any one of you can take it. In what ways, in your capacity in the bank or otherwise, have you been able to participate in innovating around digital payments? We can start with you, Steve.
Yeah, sure. So there are a few ways, some which I can talk about, but I think the first one is around cost. With our equity pay bill, for example, it's free for customers. And also we enabled the merchant's phone number as the pay bill number, which is a lot easier to remember than having another set of 6 or 7 digits. A couple other things we're looking at doing, which I think most banks or fintechs are trying to do, is to make sure that, remember, customers want to pay for various things, not just for buying food. So at our agent, for example, we're going to be rolling out a lot of these super app type things. So you can go to the agent, you can pay your DSTV, you can you can pay for a bus ticket, train ticket, etc. So a lot more payment endpoints for the customer is one way to do that. More on the sort of the corporate side is what you can call ecosystem financing. So if you broaden the definition of payments from just moving money, it's actually moving value from one store to another. And you realize that, so things like BNPL, which is quite popular now, right? That is really a payments journey where you're injecting a credit facility. If you look at the ecosystem here where you have a manufacturer, maybe they're distributing your typical FMCG, unga, oil, that kind of stuff, to a wholesaler and then to a retailer. Along that chain, payments need to be made. So the innovation around that is not moving the money because they're already using pay bills. But what happens when the retailer doesn't have sufficient funds to cover maybe a spike in demand? That's how you can sort of innovate around payments, by putting in other value adds within that ecosystem. Same goes for protecting your assets. That's insurance. Maybe the one insurance for moving from, putting their goods on a border to take to a retailer. So those are some of the things that we're doing at Equity Bank to really, one, I think, to smoothen those rough edges around payments. And also, by doing that, you really get sticky customers who then will embrace all the additional payments capabilities you put in place.
So adding in embedded services into payments.
Correct.
Great. Russell?
Sounds like an interview, right? So, think about it. When we are designing products, especially in Africa, it's interesting that we have to design for where our customers are rather than from where we are. Most of our customers, at least in the institutions I've worked in, 80% accessed the product through low-end cell phones, okay? And in areas that has limited or no connectivity at all. Now, again, financial industry, security is key. People are emotive about their monies and stuff like that. So as you build your product, you embed security. And some of these security features are what you tie the SIM card and the device to access of that financial feature. So in a bank that I was working in once, 80% of the customers that were accessing the app itself or the platform were doing it through one USSD, and they never really owned a cell phone. They were sharing cell phones. They owned SIM cards, but they're not owning cell phones. So a group of 5 to 10 individuals use the same cell phone. They keep changing the SIM cards to access the financial platform. Now, because we had tied it to SIM and phone, each time they accessed it, they were advised or they were prompted to re-authenticate themselves. And they couldn't do this by themselves. So either you call the bank or you walk into the branch. So you walked into our branches, there were huge queues for customers just to re-authenticate themselves and send money back home. Or they call, 90% of the calls at the contact center were all about that. So together with the design team, and I saw one member of that design team here, the question was, how might we enable these customers to re-authenticate themselves on a USSD platform using a different device, okay? So that's sort of what I think I'm really passionate about, that it was sort of implemented. And I think it's still the only product in this market whereby customers authenticate themselves through USSD to access financial services that they need. So I'm particularly proud of that. Yeah.
Great. Monicah, anything to add?
Yes, I'll add, there's a wonderful partnership that Ecobank got into with Mastercard and Visa, and that's Ecobank Pay. and it's the utilization of the QR code to pay. And so Masterpass and M-Visa, so basically the financial institution, not just Ecobank, any financial institution in Kenya can partner up. So what happens is that this is a form of mobile money payment, but using a QR code. We know the monopoly right now, and cost ties into that monopoly because it's the one that is there, but it's very expensive. So in this product, the financial institution is the one that, it acquires, and also basically you give the QR code to your merchants, right? And then, so when your customer is transacting, say in a supermarket, they go and generate a QR code that is specific for that purchase, specifically. So immediately you pay through your phone after putting in your credentials, you pay for your product and you go. And actually in Kenya, we had signed up Jumia for online purchases. And so you can generate a QR code as an Ecobank customer, and then that QR code comes with a cost and everything just for that product. And that is the same information related to Jumia, so that now it's updated and you get your product. But of course, in partnership with Masterpass and Visa. And in Nigeria, because they don't have the advantage of having, mobile money like we do, M-Pesa, that it was actually taken up by the central bank for implementation, and it ended up generating in 2 billion naira and something, because that's what they're using as their form of mobile money. They even have an outlet for M-Cash. And so Ecobank was one of the Kenyan banks to uptake it and have that partnership. And I feel like it's a very innovative solution. And we can now challenge the monopoly using that as a form of mobile money. Maybe a second one, because I feel like we're also dealing with consumer customers so much, I want to go to corporates. So global e-commerce is big. In the billions and trillions of dollars, we attribute that to global e-commerce. And in Africa and even Kenya as a country, we import a lot, We consume so much from abroad. So we have businesses here who are importing from businesses abroad, but how do they do cross-border payments? And that's where SWIFT comes in. SWIFT being a very secure platform, and it has so many add-ons and even partners with APIs. There's a product called SWIFT Go that is coming in, and many FIs maybe have been approached already to uptake it. And I feel like it's a wonderful thing to even just boost cross-border payment even within East Africa. So basically, SWIFT Go is coming to challenge Mastercard wow. and other maybe remittance products such as Western Union, MoneyGram. But basically, what SWIFT Go is going to do is it's going to give businesses the opportunity to be able to do trade across the borders and with a secure environment. And you're talking about a lot of compliance and regulations. See, the thing with SWIFT is that the AML, anti-money laundering regulations and compliance features are all there. So even as the FIs map into SWIFT Go, and I know they're already using SWIFT, so they're just onboarding the SWIFT Go product. As you onboard that SWIFT Go product, it's going to give your customers predictability of fees, and FX is a huge issue for customers, okay? And even when they're transacting digitally, FX, we're in different regional areas, and so your currency is stronger than mine, my currency is stronger than yours. So that FX, there's that traceability and transparency that the customer knows, if I transact and send this money to import my goods, this is the FX rate I'm using, this is the amount of fees I'm using. So SWIFT Go is innovative in that sense. It's going to give the customer much more transparency, much more traceability, because we are banking on the infrastructure of SWIFT. So you can track a payment from start to end. So you don't have that guessability, where is my payment stuck, where is it? No, it's banking on SWIFT GPI, which enables the customers to track their payments, of course, through their FIs. So in all the customer journey, that I initiated this payment now, I know it's here, I know it's gotten to the beneficiary, this is the amount of money they've been credited, because remember, the fees you are to pay, and the FX you are to apply. So you can actually tell, I just need to pay this amount, these are the fees. You're not going to get a surprise that I sent $5,000, my recipient got only $4,000, which is something corporates struggle with a lot when they're doing business. And so those are the two solutions I can say right now in payments. The consumer and the corporates can bank into through their FIs. And of course, as FIs, if we uptake those, we're going to go further. Thank you.
I feel like I need to send Mastercard folks to Ecobank to sell our money send. So we've got a Mastercard send service that does precisely what you just mentioned. Okay. So I'll send some people to you. Okay. All right. So let's talk a bit about the future, right? Recently, Mastercard launched Pay by Wave and Pay by Smile, whereby you walk into a shop, you pick whatever you need to pick, and as you're walking out, you smile. And that's sufficient for you to say, hey, I'm ready to pay, and it debits your account. So the future is bright. There are fantastic technologies that are coming out. So the question to the panel here is, do you see a world where cash is completely eradicated, down to the common mwananchi, basically the people of low social economic status? And how far is it? Who wants to go first? Russell?
I like the pay by smile, right? I wonder who the demographic is, because after shopping, I am particularly not smiling. Okay, but think about it. Think about it. Yesterday in the dailies, in one of the dailies, they were reporting on a CBK report that was based in Kenya. According to that report, apparently in the 1 year to May of 2022, we have 70 million mobile wallets. Okay. Now that's a growth of around 3 million wallets, because same time last year there were 67 million. Okay, and that's against a backdrop of 65 million mobile subscriptions. So what that means is we have more mobile wallets than we have SIM cards in this market, right? Now that was a fantastic statistic, right? But then they further said that transactions at the agency points, right, hit a high of around 700 billion Kenya shillings. 700 billion Kenya shillings were transacted at agent points through around 306,000 agents, right? Now, if you're familiar with agent stations, you know this is where customers do cash in and cash out, right? Now, if you love statistics, I have more for you. In 2012, for every shilling that got into the digital network, 88 cents was cashed out. Okay. Now in 2022, for every shilling that goes in, 67 cents gets cashed out. So we are still cashing out more than we are transacting within the digital plane. Okay. The good news is it is reducing. So to answer your question, yes, I see a world where it will be there, but a lot needs to be done. Take, for example, in Kenya, the matatu industry, very cash heavy, right? The stakeholders that run this industry are not particularly attracted to digital payments for their own reasons. I mean, the day we'll innovate a product around that space, around that industry, to enable these guys embrace it. I mean, even during COVID, there was a lot of push for them to embrace it, but they didn't particularly do it as they should have, right? So there's that one aspect. Then the second aspect is, again, the rails that drives these features, because the connectivity in Kenya is not that good, right? And that could be one of the reasons why it pushes people to cash out. If, requiring money whenever and wherever I need it is affected by network connectivity. So the moment we bring those up and also build use cases in cash-heavy industries, we'll get to that, utopia moment for those digital product developers. Thanks.
Great. Steve?
Yeah, sure. I think we'll get there, but it depends. I think it's a long journey. So generally speaking, convenience drives consumption in general. So if you want people to consume digital payments to participate in that space, you have to make it very convenient. That's number one. So like you mentioned about the matatus, if one day I could just walk into a matatu and my digital watch would pay for the ride, it knows exactly where I'm going, that convenience is perfect. I'll start using it. The matatu guy will know he's going to get his money instantly. It's not a big deal. So that means technology has to push, or payments has to push all the way down to endpoints, what's called edge financing at IoT level. We're not there yet because that requires very infrastructure that's penetrated very deeply in the country. And I think there's also a regulatory aspect of it. So in the West, credit cards are very highly utilized, more so than your M-Pesa type digital payments. Why? Because you're covered as a consumer. In North America, you're only liable $50 If you spend $100,000 on the card, you are only liable for 50. And that's held for 90 days. The liability is on the merchant, right? We don't have that here. This is around dispute resolution. I think Mastercard is aware of that. So those sort of regulatory consumer protection types of guidelines need to be in place so that people get comfortable and they start consuming the digital payments capabilities. Because they're there, like I said, we do have quite a bit with M-Pesa, be it expensive, but why do we still take money out? Something's amiss, yeah.
Do you think we're going to get to that place where it's completely eradicated?
I think we will. It's baby steps. Even in the West, it's not 100%. People still use cash one way or the other. I mean, cash has that, I think Russell, you put it right, it's very emotive. That having those dollar bills or those notes in your hand is a good feeling.
Yeah.
Monicah?
Jemima, this is a very interesting way to look at it because we've always believed cash is king, you know? Even in our movies and our music videos, you'll see them throwing around money to just depict wealth, right? No one is displaying their mobile money app. Everyone is showing. So it's something very psychological also, like, you know, cash bills. But I can say the global pandemic did push for contactless payments. Like I personally have been cashless since the pandemic started. So are we going to be cashless at some point? Yes. However, we still need to embrace the society, the financial society that is not able to access the digital platforms, who are not able to access the innovations that we're seeing here in this forum, because still, as we said, the phones, they're not smartphones, they're feature phones. So there's some apps we are developing. You know, the fintechs are coming up with wonderful apps to enhance digital payments, but the end consumer cannot utilize them because they don't have a phone that supports that, you know? And so I know the world is very crazy. Some people are in the metaverse, some people are in a very basic way of doing things. Yeah, so bridging that gap, for sure, I don't think we'll ever be cashless. I don't know how to convince some people that, you know, cash, I can still pay you via M-Pesa, but I've seen, when I go to the market, I can ask them, can I send you money? Some people have till numbers. That's why I think even the interoperability of the mobile providers is going to be very key to reduce the cost, to increase access, and also we need to have competitors to M-Pesa who can come in terms of cost, just make it more accessible. As he said, convenience drives consumption. So if it's more expensive, it is expensive, but someone like me who wants contactless payments, I don't want to have contact because of what happened during the pandemic, it's convenient for me, so I will use it. But for someone else for whom cost is key, they're not going to use it. So we may get there, but not yet. But we could see the numbers that, as he said, the mobile wallets are increasing. We saw some numbers earlier that by 2025, the digital payments will have grown so much. And technology grows. Technology has taken us where the internet took 15 years. Technology has taken, like digital technology and mobile technology has taken us only 7 years just to get there in terms of how we do our banking. So I don't think we will completely eliminate cash, but for sure it's going to reduce. Yeah.
Great. Awesome. So I'm being told we've run out of time. In case you have any questions, you feel free to reach us on our LinkedIn profiles. I think that's something that you can do. I want to say thank you so much to the panelists and to the audience for having us. Thank you.
Just one at a time so that they can have a photo with them. Thank you. Let's appreciate them. And there is one more moment that has not yet been given. Oh, yes, yes. I know self-love. If they cannot love you, love yourself. If they cannot give it to you, you give it yourself. Standing together, do we have one photo as they stand together?